This is David Craig for How the Market Works Education Center. Today we're going to be continuing our study on candlestick charts by looking at four of the most important patterns. We'll start with Marabosos. These are candlesticks that have a very long body but almost no wick on the top and bottom. These are very significant patterns, especially when combined with volume and a specific chart pattern. For example, let's say you've got a chart that's going up and you find a large red Maraboso going up against a point of resistance. Resistance is when price has not been able to go through a certain point in the chart. And then you get a big red Maraboso. This shows you that the bears have complete control of that particular stock. We would expect in this case for the chart to reverse. Now let's say you combine volume with that big Maraboso. In that case, it's a very compelling case that you're going to have a reversal. On the other hand, let's say that the market was going down and you see a Maraboso up against a point of support. Now support is when you have a chart that's going down and price has not been able to get below a certain point. This is a point of support. Now you see a big red Maraboso. This would suggest a continuation through support. If you also saw large volume coincide with that large Maraboso, then you have a very compelling case that the price is going to continue its march down. The next candlestick pattern we're going to look at are spinning tops, which are just the opposite of Marabosos. Spinning tops have a very small body, which indicates that the opening and closing price were very close. But in this case, they have very long shadows on the top and the bottom. This indicates a very strong battle between the bulls pushing that price up and the bears pushing that price down, only to settle for a standoff at the end of the day. The way that you interpret these candlestick patterns in a chart is, let's say you've got a very strong chart pattern pushing down, and then you see a candlestick that is a spinning top at the bottom. Well, in this case, you'd say, hey, the bears are indecisive whether or not they can keep pushing this price downward. And so we have an indication that maybe we're going to see a reversal. Now, if we see strong volume coincide with the spinning top, then you have a very strong indication of a reversal. In the same way, if a chart pattern is heading up with a candlestick that's a spinning top at the top, once again, that's indecisiveness for the bulls. They don't feel that they have the energy to keep pushing that price up. And so more than likely you're going to see a reversal and see the price head downward. The third candlestick pattern we're going to look at are ones that have either a very long upper or a lower shadow. It is important to understand how a long shadow is formed. Let's say we have a long upper shadow. In this case, we started out with a very strong green candlestick. But at some point at the top, the bulls decided that they didn't have the strength to maintain that price, and they started selling. Or the bears came in at that price and started taking short positions. Both of these actions will cause the price to start going down and a little bit of that shadow to start showing. Well, as that shadow starts showing, other traders will reinforce this pattern and continue this selling or taking on short positions, pushing the price even further down. Doji is our next candlestick pattern. In this case, the opening and the closing price are identical. Now, a doji can have an upper and lower shadow, but price is identical between open and closing. Once again, this is a sign of indecision. you'll see this kind of candlestick pattern at the top or bottom of a formation or during a time of rest when the market isn't going anywhere. In any of these cases, it's a sign of indecision, and the market just cannot put the pressure to push the market up or push the market down. So when you see this particular candlestick pattern, it's probably a good sign to take profits. Thank you for tuning in to the third class on candlestick patterns. This is Dave Cragg signing off for How the Market Works.